Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Hurricane Milton makes landfall on Florida's west coast. Authorities warn very heavy rains and damaging winds continue as a flash flood emergency remains. Millions are without power. We will bring you the latest throughout the morning. Global equities rally as Chinese stocks climb again, but European and US futures are flat ahead of today's US inflation data, which is expected to show further moderation of prices. Plus, Michel Barnier gets ready to outline his make-or-break budget this evening, including how he plans to narrow the deficit.
In the meantime, a quick check on these markets here. You're seeing a real divergence in the futures picture. Your Stoxx 50 futures edging lower by about 0.2%. The FTSE 100, however, is outperforming by the same margin. You are seeing green on the screen there. Again, all shaking out as we await that data later today in the U.S. session. That puts the focus sternly on the bond market. A U.S. 10-year staying above 4%, 407.06 there. And Eurodollar 109.37 on the back of that strength in the dollar. The countdown to the opening trade starts right now.
Hurricane Milton makes landfall. Good morning, everybody. It is the 10th of October. It is going to be a very busy day in Florida. We have seen already 2 million people, 2 million homes without power. Just in terms of the magnitude of what is happening here, it is pretty epic. You can see the live pictures coming to you from the state and just the extremes, Anna. You're looking at Tampa, nearly 30 centimetres of rain has already fallen. That's 3 months' worth of rain over the last few hours. St. Petersburg, 18.31 inches of rain. And the storm surge is substantial. Yeah, the storm surge is substantial. That's certainly what we're looking out for. Storm winds of 200, storm force winds that stretch for 255 miles. So that is also something to really watch here. It's not just the epicentre and where it made landfall, but also the breadth of this thing and its ability to bring those strong winds over a large area. That said, it is interesting that it made landfall at specifically Siesta Key, which is south of Sarasota, which is in turn south of Tampa. And looking at some estimates before this hit from Economists Investments, it does seem as if the insured losses could be half of what they would have been had it been at its most strong directly on Tampa. I'm not downplaying the devastation and the damage that this is going to do, but just relative to what it would have been if it had been directly on Tampa. It certainly is. It's certainly we're going to talk about throughout the rest of the show as well in terms of what those damages look like, and especially in the financial markets for those who are insuring against it. You're also seeing it get hit in terms of other places. Usually when we look at Florida, we look at things like orange juice futures, for example, the citrus belt. You're not seeing that reaction this time around as drastic. It might just simply be because of out of season. Where you are seeing it is likely, this is my obsession of the morning, in fertilizer. And I think this is really important because Tampa is home to Mosaic, which is, of course, the major fertilizer company. We know it, of course, from the onset of the war in Ukraine. That's where you saw the biggest effect. But in Tampa, 12% of the global supply of fertilizer comes out of that region. Those facilities shut down in preparation. We should also think about this in the context of Helene as well. This comes hot on the heels of Helene, and it's that 1-2 effect as well that is hitting Florida so hard at the moment. This will at some point potentially show up in the economic data too. Yes. That is what we need to think about. And in the context of the election, as you pointed out a number of times, you know, people were already voting when they were clearing up from Helene, and so it's going to be something that is very much on people's minds as they go to the polls. Are we going to see this showing up on unemployment? Are we going to see this showing up in the CPI data? Not today, but potentially down the road. Well, the chief economist, Anna Wong, over at Bloomberg Economics, making the point that this is running into when people would traditionally get their paychecks, and that's going to be an issue. You mentioned the voting piece as well. Crucial in terms of early voting in Florida, where, of course, Donald Trump has a 13-point lead. On the back of that, there are still some fresh memories of Katrina, of disaster aid for Helene in North Carolina. This is turning into a major political issue. As is, we should talk about inflation as well. And these are the two kind of hot-button topics they're talking about, because on the back of this hurricane story, you're going to likely see a move potentially in food prices, in wages, et cetera. That's all going to likely feed into the conversation you're hearing at the Federal Reserve. Let's talk about what the last 24 hours brought to us. Those Fed minutes.
not everyone was on the same page for that 50 basis point cut.
Yeah, had substantial support, but some wanted to go more gradually, it seems.
Yeah, we knew that. Like, there were dissenters. We knew that this was a lively debate behind the closed doors. We knew that that was likely to be something that was going to show up in the minutes because we did have a dissent. We haven't had dissents very often recently, and Powell moved the goalposts very quickly on this. But it now looks as if we are in a situation where it's one more or potentially two more rate cuts this year, and that's the big bet now.
We've been talking about two, haven't we? But Mary Daly talking about at least one or two, and so that puts that conversation back in focus. Meanwhile, stocks rallied. US markets at another record. Chinese stocks actually turning around in this session, at least. We've got some more detail. Again, it comes down to the detail of what we're getting on Chinese stimulus. So stocks up there, increased liquidity details. So exactly how that particular project is going to flow. Getting more detail there, and a press conference due on Saturday, as we discussed yesterday. All of this ahead of the CPI preview, CPI data we get from the United States later.
CPI, PPI over the next 24 hours. Is this kind of the next set of clean data, the last set of clean data that we're going to get, which isn't going to be hurricane affected, which isn't going to be strike affected as well?
Yeah, it's a good point. And how much of that data moves the dollar, which, of course, we're seeing some strength today on the back of those treasury yields. The other side of that is weakness coming from the euro, weakness coming from those European currencies, and that leads us nicely to the
dollar's been on a tear, and the language coming out of the ECB is increasingly sounding dovish, which is in stark contrast to what we're getting from the Fed at the moment, it seems, which has been dovish but may not be going forward. But you've highlighted the fiscal events as being so important over the last few months. Today we get a big set piece. The French budget is going to be coming through. Barnier, it looks like he's going to be effectively leaning on cuts as the main weapon here, but he is going to be increasing taxes, and that's going to create all kinds of different dynamics within Parliament, which is effectively divided into three main camps. Now, the left are going to vote against this, whatever happens. It's the right and the centre that are going to be really interesting. The centre doesn't like the idea of tax hikes.
Yes.
Are we going to be seeing, therefore, problems with the centre? And if this doesn't get an absolute majority, does it really matter? There's a potential we don't see a vote of confidence within 48 hours that actually this goes through regardless.
Yes, and so a lot of power in that regard in the national rally, as we've talked many times, Marine Le Pen, who does seem to have the ability to either make or break Barnier in his role here. But interesting, on the taxes, we have a guest coming up a little bit later in the programme who argues that it's really difficult to have temporary tax increases.
2 years, apparently.
Yes, well, Macron's trying to make the case that it'll be 2 years, and it'll be only 0.3% of households, and it'll be only 300 businesses. But anyway, we'll get a perspective from our guest who says it's very difficult to bring them in temporarily.
Well, I think the precedent that France is setting for the rest of Europe is really crucial here as well. There's these domestic issues on the taxation, on the pension reform, etc. But the fact that they have a budget that is getting delayed further and further into the EU Commission's agenda, basically, that is a real sticking point from the likes of Paolo Gentiloni over in Brussels, who's putting pressure, not just on France to kind of get their political situation together, but others as well. Spain is a great example. Go ahead.
Yeah, well, I was just going to say, you've just come back from Spain.
I have.
You've had a busy couple of days of reporting, a very much more positive story coming out of Spain, and bond spreads have reflected that.
They have, but, it's so interesting because on the ground, it's a little bit of a point of pride in Spain at the moment that, they've beat the French at something when it comes to the bond market. They can't say that very often, but they do have one eye on that budget because so much of their outperformance is based on the aid and EU funds that are coming through. That's contingent on the budget, and the argument they're making there is, well, France gets a delay. Why don't we? I asked Carlos Cuerpo, the Spanish economy minister, yesterday just about that in an exclusive interview. Take a listen to what he had to say.
So the Commission this year has said, listen, we do not want no policy change. We do not need no policy change documents. So we will give you a bit of flexibility. And actually, Commissioner Gentiloni said it with its limitations, but we will give you flexibility to make progress with your budgetary process at home.
Carlos Cuerpo there, the Spanish economy minister, talking about what that process really looks like in context to the EU. That key word, you have flexibility, but limited flexibility. And this is where they're really getting under the wire because Pedro Sanchez does not have the support.
This is the problem. So you want to make comparisons with France and talk about what is going on in France at the moment and the political instability that is resulting in economic issues. Spain is a hairbreadth away from having issues surrounding its government. Sanchez does not have a majority. Sanchez is clinging on by his fingertips. Were we to see political instability in Spain, how would that be represented in the bond market?
Well, it's interesting because we were just showing a chart about how the yields are below that of France. But if you talk to the folks over in Spain, record bond auctions, investors cannot get enough of this. And that's something that Spain has never seen in its history.
Meanwhile, the conversation here in the UK, so there's the Spanish 10-year demand. The conversation here in the UK is, are investors going to get nervous about gilts and gilt supply ramping up after their budget?
The argument here is, if Rachel Reeves creates more fiscal headroom for herself, can she use it? Should she use it?
Will it be absorbed in the market?
If she doesn't, if she does use it, will the bond market kick back? And I think that's going to be something we're certainly going to watch into the UK budget. Three key budgets in focus across Europe. We've got some great guests to talk through all of this story and also what is happening in Florida. Let's talk about what we've got coming up. We're going to be talking about cat bonds, catastrophe bonds. Milton's impact on that market is going to be fascinating. Tanya Vosch at 7:30. We'll discuss Michel Barnier's budget with Charlotte de Montpellier, senior economist covering France at ING. That's coming up a little bit later on. Critical budget for France. The opening trade, Benedict Lowe is going to be joining us, equity and derivatives strategist over at BNP Paribas Markets 360. 8:30, we're going to shift a little focus, shift gears. I should probably be saying here, though in the world of EVs, that's probably not true anymore. Horst Schneider, head of European Automotive Research at Bank of America Global Research, is going to be joining us, Anna.
Yes, all so much more automatic these days, even in this part of the world. Let me tell you what else is on the radar. 12:30 UK time, we'll get ECB minutes. 1:30 UK time, we get US CPI. And 7 o'clock UK time, that is, we get the French budget. That seems late. That seems a long time to wait, but plenty to focus on in the markets ahead of that with some of that US data. Here's what else you need to know this morning. Let's get an update on some of the corporate news flow. Bloomberg understands that Stellantis CEO Carlos Tavares is planning a deep management reshuffle in response to the automaker's disastrous profit warning. Tavares may present his proposal at a board of directors meeting in the United States this week. The car maker is struggling with waning demand and high inventory. GSK will pay up to $2.2 billion to resolve almost all US court cases over allegations its old Zantac medication was contaminated with a suspected carcinogen. The UK drug maker didn't admit liability in any of the cases, claiming there was a lack of reliable scientific evidence that its drug increases the chances of cancer. And Airbus deliveries fell 9% in September to 50 aircraft, compared with the same month last year. In total, the plane maker has now delivered 497 jets so far this year. It comes as rival Boeing faces its own problems, including a strike by workers which has shut large parts of its manufacturing facilities. And lots of people saying they're going to struggle to meet, Airbus this is, going to struggle to meet their delivery target
which has already been downgraded. It was 800, it's now 770. The team over there is having significant problems with the supply chain. That is showing up. This isn't strike-related or anything else. It's just what is happening within the supply chain. So they've already downgraded that. The end of the year tends to be quite big. You push through a lot of deliveries right at the back end, but even so, they are going to struggle to make this at a time when their main rival is struggling and struggling in a substantial way.
So they can't really capitalize on this moment,
no,
it seems.
Because of the supply chain.
Yeah.
It's been a story that Guillaume Faury's been talking about for really quite some time. It is limiting their capacity to be able to deliver jets. These guys get paid when they deliver jets. They need to be able to make these targets. Q3 numbers are coming up very shortly. Are we going to see further downgrades in terms of the financial numbers? I think is what people are looking at post this set of data.
I do find it really interesting that almost regardless of whichever aircraft supplier you use or a mix of the two, lots of the airlines that we speak to, that you talk to, Guy, are very keen to point out how they want both of these companies to be healthy, because they really don't want too much concentrated power.
Airbus wants that as well. And it's also important for Airbus's supply chain that there is a healthy competitor as well that has an impact. So you look at Senior. So Senior is a UK company, supplies into the aerospace industry. Its stock was down really heavily yesterday. Kawasaki Heavy's been down pretty hard. The supply chain is already really starting to feel the pressure.
I was about to say, do we see this trade at today's open, given the move that we saw yesterday as well? Is this really a surprise for the folks who've been looking at the supply chain story?
I don't think it's a surprise, but I think it further augments the idea that we could see further downgrades coming through from Airbus at the Q3 point. There's a kind of bigger threat here as well, which is, when does the next generation of narrow-body aircraft come through? Do these companies have the financial capacity to be able to do that? Airbus is in a much better state. And does it open the door to the Chinese? COMAC is coming at some point. The Boeing struggles make that arrival more likely. And it's going to be interesting to see how the timelines are ultimately affected here, because Boeing needs to invest in its business as well as raising money. So that's the kind of the longer-term challenge, more medium-term challenge, you could argue.
The China overhang, certainly in planes, certainly in autos as well. Coming up, we're going to dive into that piece of the story. European autos, of course, in focus. We're going to have the latest on the Stellantis shakeup, tariffs, the manufacturing woes in Germany. Again, that China thread throughout that space as well. Plus, it's make or break time for Michel Barnier. We'll head to Paris ahead of his budget reveal later this evening. Up next, though, cat bonds set to take a hit as Hurricane Milton makes landfall. We're going to bring you the latest on the storm and its broader impact. If you have any questions of your own for us or for our guests, dive into the conversation. Send them to us. IB plus BB TV Go is a function on your terminal. This is Bloomberg.
Thursday morning, good morning. 41 minutes to go until the opening trade here in Europe. Looks like we're going to see a fairly negative position at the get-go this morning. One of the reasons for that, we saw a decent day yesterday. London looks like it might outperform. As you can see currently, it is pitched a little to the upside. China was a little higher as well. We're starting to see some stabilisation, but we're looking forward to the Saturday briefing from the Ministry of Finance there, which is causing a little bit of volatility in advance of that event. Talking of volatility, let's talk about what is happening in Florida. Hurricane Milton has made landfall in the state. It landed as a Category 3. There are warnings of extreme winds, which we're already seeing, potentially a life-threatening storm surge. Investors in catastrophe bonds are also bracing. They're looking at potentially substantial losses. That's as the combined destructive forces of Hurricanes Helene and Milton look set to trigger payment clauses on a scale not seen in years. This has been an area where hedge funds have been making a lot of money. Let's figure out exactly how this all works. Valerie Teitel is here with the details.
Thanks, Sky. Just let's go over the basics of how these catastrophe bonds work. They are a very high-yielding debt instrument. Last year, they ranged anywhere from 15 to 20%, the newly issued bonds last year. They're issued by insurance companies, which in this deal, they're called sponsors. They raise funds for insurance companies and also protect them against these catastrophic events. Investors lose their principal entirely when a special event is triggered. And very good in turns for the investor because they're just completely uncorrelated from how the market reacts. They were a popular product in the low zero interest rate period that we just went in through, but they're even more popular now, and that is because Hurricane Ian, back in 2022, this caused around 10% of losses for these holders of these catastrophe bonds. And ever since then, the investors have demanded a higher and higher risk premium in order to hold them. That made this sector, generally this hedge fund strategy, one of the best performing last year, around 20% for that hedge fund strategy last year. But there is this concern on the horizon of this year. We have this Hurricane Milton coming to hit, and we're hearing from the market that it could cause losses for catastrophe bond holders of up to 15%. So that would be substantially more than the losses they took back in 2022 with Hurricane Ian.
Valerie, thank you very much. Bloomberg's Valerie Teitel with a briefing on cat bonds and the way they were, as she rightly says, a very popular trade, certainly in 2023. Let's get more from Tanya Vrosch, who is head of cat bond portfolio management at 12 Capital and joins us now. Tanya, really nice to have you with us. So assuming that all or some of these cat bonds are triggered here, and you can tell us your assessment, how large a hit do you think we're going to see to the overall cat bond market as a result of Hurricane Milton?
Well, luckily now we have, as you just summarized, the latest information of how the event actually did make landfall. And luckily, this is not the worst case scenario in terms of insured losses, and I think also in losses and damages for the state. So it's still very hard to estimate and give like number ranges, but as you said, it's up to 15%. That's what we thought earlier. Cautiously, we would say it's likely less. It played out in the end a bit better than at some point was forecasted.
Tanya, what is covered here? Is this just cover for high winds, the impact of those high winds? Because one of the things that we're seeing in Florida is flooding. Heavy rains as a result of Helene, potential storm surge coming ashore with Milton. How does the impact of the rain and the storm surge impact the triggering of these bonds?
Oh, that's a really interesting question because typically in the majority of catastrophe bonds, you only have the wind policies covered. So the flood should theoretically be not covered. However, in such a severe event like we're seeing with that hurricane, it's very hard to tell in the aftermath from where the damages came. Was it flood or was it wind? So there's something that we call leakage. So when you assess the impacts of the storm, you will need to take into account that likely you will also have to cover some of the flood and storm surge losses because you can't really just distinguish them from wind. That said, there's another segment in the cat bond market that, on the other hand, really covers exclusively the flood segment. So these are, of course, directly linked to the very extreme flood surge and dangerous conditions that we're seeing right now.
Tanya, you're no stranger to hurricane season, of course, in the States, but I'm curious if the strength of this storm and the records that it's breaking in so many ways changes your strategy on some of your positioning around it. Does that mean in the recent days, weeks, months, in anticipation of the storm, have you ditched any of that positioning?
Yes and no. Like we definitely obviously follow all the forecasts for the season, and as we all know, it was very much in the media. 24 was supposed to be a very active season, so that is something we do take into account into positioning in the portfolios. On the other hand, these forecasts have a high degree of uncertainty. So it's more about, you know, putting your exposure into quality names, things you feel comfortable with going into the season, and maybe also to say, as cat bond investors, you need to expect to have a loss at some point. Like that's really part of the strategy.
Tell us a little, Tanya, about the secondary market here. What kind of liquidity do we see in the secondary market? How is it performing?
Yeah, I think really good, really positive. I mean, the asset class is quite new, just a few decades old, basically, 20, 25 years. So it's still developing, and we've seen around the events also before and likely after lots of bids and offers of exposed names, which we think is very positive. So liquidity can be there if you want to trade. And I think also interesting is that we can observe that non-related catastrophe bonds, for example, something that covers Japanese earthquakes, so completely unrelated, is also still tradable, normal prices, no impact, so you can rebalance parts of your portfolio despite an event ongoing. So it's a very, very positive development that we're seeing in terms of maturity of the secondary market.
Tanya, as you say, this is a relatively young market, only a few decades. How much more can be done in this space? How much more can we see risk being managed more broadly across the financial markets when it comes to extreme weather, something we're all going to have to learn to live with?
Yeah, you're putting it in perfect words. I think we all hope that it develops much more and gets broader and bigger because in a very generalized way, it may sound a bit cheesy, but kind of the world may need it. Like the weather gets very extreme and there's a huge demand for coverage. There's also still a very big insurance gap. So a gap between the values that are around and the values that are insured. So a lot of things are not insured. So when you only place that into the dedicated reinsurance space, there's not enough capital. But if we can share it with capital markets, which is a multitude of that, then like sharing is caring, it can really help carry those risks.
Tanya, that's a very nice way to think about it. Tanya, thank you very much. Tanya Vrosch, Head of Cat Bond Portfolio Management at 12 Capital. Coming up on the programme, we'll be back to those budget talks. Make or break, France is set to announce his budget later on today with the pressure firmly on Prime Minister Michel Barnier. This is Bloomberg.
The
French economy has been kind of getting away with fiscal murder for a very long time.
This cabinet seems to be committed to continue the pro-competitiveness agenda.
I expect the government to be very, very serious on diminishing public spending because it's absolutely necessary. And if you concentrate only on taxes, you will only weaken the economy.
The question is not what government we will have in France, but when it falls, when it collapses, and it could take some months.
I wouldn't speak about austerity measures. I would speak more, as I said, on responsibility, accountability to people.
We need to straighten the ship very quickly if we don't want to get into a much more troubled waters.
I'm quite confident that they will do their best to tackle what is on the table.
The goal is to convince all the observers, market participants, investors, savers, that they can trust that indeed France is going in the right direction.
Recent guests on Bloomberg TV weighing in ahead of today's French budget announcement. Let's get right into it. We're joined now by Bloomberg's Caroline Conan from Paris. Caroline, walk us through what we can expect after this long wait.
Restore trust. You heard from Jean-Claude Trichet. Restore credibility with some austerity. We know that 60 billion euros are needed. 2/3 will come from savings, 1/3 from tax hikes. The finance minister, Antoine Armand, has already said that a big part of the savings will actually come from capping the budget of the ministries. Some public services will be merged, some public servants not replaced. There should be less support for R&D, less support for apprenticeship. The social security system will also contribute with less payment for sick days, a delay in the indexation of pensions, and of course, tightening the belts of local authorities. Now, in terms of taxes, extra revenues, we've talked a lot already about this new extra tax on the big companies, generating more than 1 billion euros of revenues. This should bring as much as 8 billion euros. This should target about 300 of the biggest companies. As you can see here, some construction sector, Eiffage, Bouygues, Vinci, the aviation sector, Dassault Aviation, Safran, according to Morgan Stanley analysts, actually should be impacted by as much as 5% of their net income, so quite significant here. And in terms of taxes that could affect individuals, the end of the electricity tariff shields that were inherited from the energy crisis, that will be totally finished. And finally, for the wealthiest individuals, they should see their income tax increase if you're part of the 0.3% richest in France. For example, a couple without children earning more than 500,000 euros a year, those people will see their income tax increase.
Caroline, will this be not enough for Brussels but too much for French politicians?
Now, that's a good question. We'll see the reaction immediately from the rating agencies as soon as tomorrow night. We'll get Fitch ratings. We know that Brussels has already placed France under an excessive deficit procedure. So they need to bring some answer. And the debt is going to continue to rise to 115% of GDP next year. As you can see, it's gone constantly up over the past 25 years. It was 60% under President Jacques Chirac at the beginning of this century. Now, we'll also see how long this government survives. It already survived a vote of no confidence on Tuesday night because the National Rally didn't support the motion of censure from the left wing. Marine Le Pen has become the de facto kingmaker in Parliament. We'll see how long until she actually pulls the rug.
Yes, we will watch with interest to see when that moment arrives. I'm interested to see how Macron's supporters deal with the tax hikes and how they're going to deal with that one. I think it's going to be an interesting part of this picture. Caroline Conan joining us out of Paris. Thank you very much indeed. Joining us for more on this, Charlotte de Montpellier, senior economist for France and Switzerland at ING. Charlotte, good morning. Good morning. Is it going to be enough?
Yeah, that's not sure. To be honest, first of all, there are a lot of measures that are being announced that are supposed to be temporary, but we know that probably won't be enough to put the deficit back into the right trajectories. We also know that this kind of measure, they tend to disappoint. So it means that even if they count on some revenue from those increase in taxes, it could be that in 1 year time they realize that at the end it was not enough. It didn't bring enough revenue. So we are not. It could be that we have more unpleasant surprise regarding the deficit. Yeah. So I suppose that at some time they will have to do more, and probably more on the expense side of the equation. But so far it seems to be very difficult. So I suppose that at some time we will have a discussion about pension and the pension system, which is very costly. But right now it seems that it's only things that that won't completely change the situation drastically in the future, at least if the temporary indeed stay temporary. So probably not enough, at least in the long term.
Charlotte, I hear a lot about tax cuts. I hear a lot about, tax hikes. I hear a lot about expenditure cuts. What I don't hear a lot about is growth. Where does growth come from?
Yeah, that's a bit the issue, because growth is, at the end, if you want to have more tax revenue, you need more growth in order to have those revenues. And the issue right now is that France, as the whole of the Eurozone, is in a kind of a slowdown of the economy. The government is still very optimistic for next year. They hope to have 1.1% GDP growth, which seems little as compared to the US, but it's actually quite good if we compare to the other countries in the Eurozone. In Germany, there is actually right now a recession, so it's much better. But I think they are much too optimistic for next year, because we are seeing sign of slowdown on the export side, but also the consumption is not picking up. And we know that when we have tax increase, usually it leads the consumption, domestic consumption, to decline or to be more cautious as well. So probably GDP growth will be lower next year than it was this year, and it means that the budget will be even more difficult. So they think it will bring 60 billion more. Probably they will need more than that in order to reach the 5% deficit target, 5% of GDP deficit target. So clearly, in a slowing down economic environment, it's not easy to find the right measure, and probably will be a drag on growth next year, all those tax increase.
Yes. Charlotte, we've talked on the programme a few times about how the National Rally is in a position of some power in terms of the politics in Paris, and if they decided they didn't want this Prime Minister anymore, then they could do something about that, teaming up with some other parties, of course. Given that, are there things that we're expecting to see on spending plans in the budget? Are there spending plans that might be announced today because the National Rally wants them, but that bond markets would not like?
Yeah, that's remain to be seen. So right now they seem to be quite open with the decisions that are being announced by Barnier and his government, but they could change. And of course, they are the kingmaker. So if they change mind and they decide that it's not like they want, they can completely change the course. So it means that clearly there is a risk of further political disruption, I would say, in France, and that's also incorporated in markets, and probably one of the reasons why also spread widen, because we are not sure that this government will be able to stay in place forever, and at least as long as it is needed in order to make the budget situation better. So clearly a risk right now. There is no indication for that, but this risk will remain as long as we are in this current situation in the parliament, definitely.
Are you expecting Europe, Charlotte, to apply any sanction on France because of the excessive deficit procedure? There's not much history of that.
No, yes, that's a tough one. I think that Europe does not want to put too much pressure on France. Of course, the government does not have a very big mandate, so they cannot completely implement structural changes, so that they cannot do. So they know, and probably they will remain quite hawkish, I would say. But of course, they need to show, the French government needs to show some goodwill as well. and the budget plan should be credible. And if it's not the case, then of course they can be a bit more. Europe can be a bit more harsh, to be clear. But I think if they provide some credible estimation, probably they won't say too much at this moment, and we'll see what happened during the next month, and probably this question will come back again for the budget 2026.
Charlotte, it's Kriti in London. Talk to us a little bit about the pieces of the budget that are most likely to get hit. We had our French correspondent, Caroline Conan, right before you, speaking about how energy subsidies were going to be a big piece of that equation. What other parts of this budget are in peril?
Yeah, the big part is increase taxation on big groups, basically. So this is one of the big elements that they want to do. They say that it will be temporary, but it's never a solution when you have a very big deficit situation that is a long time deficit situation. To have some temporary solution, it never works. So at the end, I suppose that at some point they will have to transform this temporary increase in tax into definitive increase in tax. So that's very clear. So I mean, this is the big element, increase in taxation for big groups that are having revenues in France. Of course, the signal is not so good for activity, because it goes completely the other way if you compare to what Macron was trying to do during the past few years. So that's the very big element in the budget. And then you have several other tax increase. One is for household, the richest one, and then some other that are more like in the greening in the economy, so on flight and so on. And to be honest, that's on the tax increase side. On the expense side, it's not really clear at all right now what they want to do. So that's also a bit of an issue, because they say a lot that 2/3 will come from decrease in expenses, but at the end it's not clear. Yeah. And I'm a bit afraid that at the end it won't materialize, so that the bunch of the effort will have to be on taxation, and that taxation at the end will have to increase more than that. So clearly, even if it's a right-wing government, it goes into some kind of left-wing direction. And clearly, to be clear, it's really different than what Macron was doing during the past few years. So it's a complete change for the French economy.
Charlotte, 30 seconds. I'm going to put you on the spot here. How does the tariff conversation fold into the budget story? Of course, in the last couple of days, we've seen reciprocal tariffs from China on things like EU brandy. Does that feed into these conversations? 30 seconds.
Yeah, I think it's not the main element. To be honest, there are so much bigger concern in France right now. It goes there, and so that's clearly something, but it's not the main problem right now. But to be honest, they are following the situation, and companies clearly are a bit worried about what can happen next with this trade discussion with China, clearly.
Certainly something we're going to be keeping an eye on. Charlotte de Montpellier, senior economist for France and Switzerland over at ING. We thank you so much for joining the program. Coming up, GSK will pay up to $2.2 billion to settle its Zantac liability cases. We're going to take a closer look at how the settlement is going to affect its share price. That conversation next. This is Bloomberg.
Welcome back to the opening trade. 7:47 in London, 13 minutes until the start of opening trading here in Europe for stocks. And the picture for equities looks fairly flat. Flat to negative, perhaps. Flat to negative in the States, but not by much, down 0.1% on E-minis right now. We gained yesterday in Europe and in the United States in terms of the stock story. Even China turning around overnight in the Asia session, but we'll see what another day brings. So the European session ahead. Let's talk about markets with our managing editor for FX and rates here at Bloomberg in the US and EMEA. Rachel Evans with us this morning to talk about the markets in 3 minutes. Rachel, let us home in on some of the data that's due out today. CPI inflation. What is at stake here? Because we know a lot of people have told us that it's all about jobs these days. It's not so much about inflation, as that seems to be more under control. But if the jobs market isn't cracking as quickly as we thought it was, some people are starting to think about inflation again.
I think that's exactly the situation that the market is finding itself in. And we're kind of at this interesting inflection point where the market has taken an awful lot of risk off the table. You know, when we went into the jobs report last week, it was a question of, are we going to see a 50 basis point cut or a 25 basis point cut in November? Now we're only 80% priced for a cut at all in November. So there's been a huge amount of money kind of taken out of the market, and that's largely been on the fact that we have these inflation kind of fears starting to resurface, this idea that inflation's not dead and that the Fed is going to need to start thinking about that part of its mandate again. So I think when we look at these figures, we're not necessarily going to see the market taking massive reassurance from kind of the inflationary numbers that we see if they come in line or if they do show indeed some kind of easing in inflationary pressures as we've been kind of trending lower. But if we do see those kind of surprise on the upside, if inflation is still running hotter than the expectations would suggest, that could be something that really sort of prompts another leg for markets, given that we've already seen a huge sell-off, a huge kind of reining in of those expectations for Fed cuts. I think this could be kind of like potentially a catalyst for that to kind of run further.
There's a chart that's kind of entertaining me at the moment, and a few days ago we were talking about the 1970s, and it's overlay charts. You can take them, maybe you don't like them, maybe you do, but it's basically inflation now versus inflation in the 70s. Let's just bring it up, and what it shows you is basically inflation picks up, goes down, the white line's the 70s, the blue line is now. How big a fear is there in the market that inflation does take off? How big a fear is there in the market that we see yields going back up to 5-6% in the 10-year? Are people talking about that actively at the moment?
Very much so. And I think, you know, a lot of people are talking about this kind of no landing scenario now. Rather than a hard landing or a soft landing as the economy slows, we're thinking about no landing. The idea that the economy starts to re-accelerate again. And I think kind of when you look at sort of the yields, we've really been seeing that in the last kind of couple of days. You know, you've been seeing those yields kind of backing up. We've now got the 10-year over 4% again. It's going to be very interesting once we get past the election, where there's a lot of talk about the inflationary policies of both of the two presidential candidates, whether we start to see that narrative take a bigger hold in markets. At the moment, we're still at the beginning of a Fed cutting cycle, but the question is going to be, how much can the Fed really cut? Is it 2 cuts, 3 cuts, and then we stop and stay higher for longer? Or do they continue on this path lower as the market is currently predicting?
Is that reflected in the fact that we're looking at a 10-year that's at 407 right now? What kind of ceiling are we looking at?
It's a good question. I mean, I think like sort of back in the kind of height of the cycle, we were looking at 5% as kind of the point at which we peaked and started to come down. There's definitely no kind of barrier to us going back to that level if inflation starts to reassert itself.
I'm curious then if the 5% narrative comes back, or even, as Guy was saying, the 6%. That's something that's priced in the markets before the economy. We'll leave the conversation there. Bloomberg's managing editor for FX and rates in the U.S. and EMEA joining us this morning. We thank you so much. You get more analysis from her and the team. Just type in MLIV Go on your Bloomberg terminal. Let's go from the macro to the micro with Joe Easton from our stocks team. Joe.
Morning, Kriti. So GlaxoSmithKline is expected to rise this morning after the company announced a big settlement in the US related to Zantac. Now, remember, this was the heartburn medicine that was said to be potentially cancerous. They've settled 80,000 cases, representing around 90% of the litigation against the company for $2 billion. According to a statement. And here's what happened to the US listing as that news broke. It jumped around 6%. But if we look at the London listing, we can see this is a drop back in 2022 when these lawsuits were first announced. We have recovered a bit of that today, but we are expecting to see some moves higher this morning as well. Then one that's going to go the other way potentially is Repsol. This is over in Madrid. The big energy firm announcing disappointing trading updates after the close of trading yesterday. Both their refining margins and their oil production seeing some weakness, according to analysts over at Morgan Stanley and Jefferies in notes today, calling this stock lower. Here's the comments from Morgan Stanley saying that they do expect a negative reaction to this one, with the numbers missing their consensus estimates. Then over in financials, firstly, we're looking at Insurers. Given the devastating impact of the hurricane over in Florida, the ones we're looking at again are the Lloyd's of London names, including Lancashire and Hiscox, and the reinsurers as well. They've all seen some weakness recently. And then in banking, HSBC is looking to save around $300 million in costs, potentially via management job cuts, according to a report from the Financial Times this morning. There's HSBC stock on a bit of a decent run, but that restructuring in focus once again. Then in terms of your ratings, some big ones again today. Anglo-American down to neutral at JP Morgan. Ryanair also cut. That's over at Oddo, down to underperform. And finally, Sika, the $50 billion chemicals company in Switzerland is an underperform at Bank of America this morning.
Joe, thank you. Joe Easton, our equities reporter, with the details on some of those stocks that will be in focus this morning. Looking at the session ahead, then, clearly we're waiting for CPI, and we might or might not see movement on that. We've got US futures looking pretty range-bound this morning, flat to negative. And yesterday, though, here in Europe, we had quite a bullish session. The best-performing sectors, technology and autos, that's a sector that's been really beaten up of late. So quite a lot of positivity, it seemed, in the markets yesterday. All sectors were in positive territory.
Well, it seems we'll have to look how that shows up in the micro space. Stellantis is going to be one that we're, of course, keeping our eye on. You pointed the story out in terms of a management shakeup. You also know they've been suffering from the strike story, the supply chain story, among many, many others, not to mention the tariff piece, which is really resurfacing from a micro level all the way up to the macro. It's a key part of the conversation, tariffs, when it comes to the budget in France and Spain and Germany.
I wonder what's going to move things around over the next few days. Is it going to be China?
Yeah.
Is that what we're looking forward to? Is that the next big event? Hedge funds have been aggressively selling out of China in the last day or so. Is it going to be the CPI? Is it going to be the PPI data? We're also we've got to factor in the hurricane. I think a lot of people do remember the bad experience that America has had with hurricanes in the past. There's no indication yet that we're going to see any kind of repeat of what we saw with Katrina, but that memory still exists.
And it fed into the politics. And
absolutely.
It's incredible timing when it comes to US politics. So I suppose that's also why it's so front and centre in our minds.
Absolutely, and this comes off the back of Hurricane Helene, of some of the disaster aid that was due to North Carolina, not fully hitting it just yet. And it's just this kind of double whammy that you are seeing on the East Coast. And we should mention, when you mentioned the politics story, Florida right now pointing a 13-point lead for President Trump, or former President Trump. So we'll see whether or not that shakes out and whether or not that has an effect. All of that part of the conversation. We're going to talk about the hurricane impact on the micro, on the politics, the macro as well, of course, when it comes to the likes of payrolls and how it shows up in the data. And then, of course, what's going on in this bond market. Is it the Fed that's driving things? Is it the budget? Or really, does everyone just take a back seat and wait till things shake out? The market open is up next. Futures are a bit mixed. This is Bloomberg.
Thursday the 10th, good morning. Couple of minutes to go until the opening trade. I'm not sure, actually, that we are going to get much steer out of the United States from the back end of yesterday's session into this morning's session here in Europe. White line, Europe, decent rally into the end of the day. US kind of finishes pretty much in line with that. A little bit of a fade after the European close, but a pop towards the end of the day. Kind of leaves us net unchanged, I would argue. And I think that's what we're beginning to see reflected in the futures this morning here in Europe, Kriti. It's hard to see kind of the momentum, the direction out of those futures at the moment. A little soft.
I think that's the right read. A little soft in broader Europe, and you're seeing that reflect in Eurostoxx 50 futures down by 0.2 of a margin. However, you are seeing slight outperformance in the FTSE 100 story, higher by about 0.1%. They're all eyes, of course, on France, because we are keeping an eye on, of course, what the budget looks like out of Michel Barnier, Anna, down about 0.2% in anticipation of that. I'm curious how this all shakes out. When there's so much to digest, what do you price in? And right now it feels like not a lot.
You're right, yeah, a lot of moving parts this morning. Let's have a look at some of the individual stock moves then, Kriti, because they might be a little easier to understand and to digest. So GSK could be one of those movers. We could see a pop higher in the GSK share price. That's certainly what happened to the ADR during US trading when we got the announcement that GSK has reached a settlement agreement over Zantac, that there were cases hanging over this to the value of the settlement, is $2.2 billion. There were 80,000 cases in question here. So even though they admit no wrongdoing here, GSK has settled. So that's something we watch. Repsol, disappointing with its trading statement, at least according to Morgan Stanley and Jefferies. And HSBC certainly in focus after other media reporting some cost cutting, which we kind of knew about, but we'll keep an eye on the share price. Guy.
OK, so here we go. Single stocks are going to be really important, as Anna says. Records in the United States. Not much of a read across, though, here for Europe. So it's time for the opening trade. We're expecting a flattish picture. Yes, the FTSE 100 may outperform. GSK, to Anna's point, the single stock story that we're going to be watching so carefully there. I wonder whether the action really at the moment is in the bond market. That move above 4 on the US 10-year, I think, is significant. Where does that ultimately take us? But here we go. We're up a little bit. I think that probably is a flat market start that we're looking at there. The Stock 600, absolutely flat. Even the FTSE 100, which was expected to be 0.2% higher, is struggling to make some headway here. The CAC is already opening down 0.2%. So at an index level, not much going on. We're waiting, we're watching. but there's some churn below the surface. Kriti, what's going on?
Well, you are seeing a little bit of movement here when it comes to some of your heavyweights, your sensational six. If you look at them here, Novo Nordisk, from an index perspective, is your biggest contributor to the upside. It looks like tech, or biotech, I should say, pharma, is kind of helping with the move higher. To the downside, though, it's a little bit of a mixture. I'm seeing Airbus certainly take a hit off of those deliveries, down about 0.9%. And then I'm seeing a slew of other companies, from cars to private equity firms to a little bit of everything. A mixed picture in today's session, Anna.
Yeah, absolutely. So the worst performing sector, autos and parts, and we've actually, in terms of the companies moving around there, Renault is one of the worst performers, but down just over 1%. But really, that's a reversal of the trades of yesterday, isn't it? We saw that sector did pretty well in yesterday's session, and today less so. Chemicals is the best performing sector this morning, and Givaudan is one of the, maybe you mentioned this already, Givaudan out with some guidance, I think, earlier on, and that stock up by 2.9%.
Yeah. But no clear signal, I don't think, coming out of the session that we can discern at this point in time. It feels like the action is elsewhere. Stocks making record highs in the States yesterday. But where does the catalyst come from here, I think, remains an open question. We're waiting for that CPI number out of the United States a little bit later on. French stocks, I think it could be interesting to see what this tax story looks like and how that's going to impact. Is that already priced in to a certain extent? I think probably it is. There's an expectation that we're going to be seeing tax hikes for 2 years. I think probably everybody believes that is maybe fanciful thinking. 2 years tax hike, they tend to be longer than that.
Yeah, well, I think it's a crucial piece that you mentioned. And in today's session, of course, you're seeing Airbus see one of the biggest heavy volume when it comes to the downside move. Safran, of course, is a part of that trade as well. But you mentioned the budget, and you mentioned that the bond market may see more action than the stock market. I think you're seeing that this morning as well, with some of those bonds yield, at least across Europe, they were initially higher about 2 to 3 basis points. Now they've pared back just a little bit to about 2 basis points. There's a lot going on. Is it the budget story? Is it the Fed story? Well, we heard from Mary Daly yesterday. Take a listen on what she had to say.
I think that 2 more cuts this year, or 1 more cut this year, really spans the range of what is likely, in my mind, given my projection for the economy. But it's really important to put caveats with that.
Joining us now is Benedicte Lowe, equity and derivative strategy Europe over at BNP Paribas Markets 360. I'm so sorry, I completely butchered your name, but we're thrilled to have you here. Walk us through the story. Are we looking more for the volatility in the bond market or the equity market?
So what we've seen in the equity market is that vol has picked up over the past few weeks on the back of some geopolitical tension, but at the moment is struggling to realize. So you see there's some pressure on the downside as the carry is not realizing, whereas on the bond side, I think the picture is moving from the expectation of a lot of Fed cuts, ECB rates cut, and that is also moving. So you're seeing more volatility that is warranted more so on the bond market at the moment than on the equity markets.
Does that create a dislocation, though? I mean, I think we've been waiting so much for, in the last, I would say, 2 years, where you start to see bonds and stocks operate in the opposite fashion, a trade-off of what kind of exposure you want given. Do you look at, say, the geopolitical risk or the volatility or even some of the micro action in stocks relative to, say, Fed pricing, budgets, et cetera, driving the bond story? Do you think that correlation is closing?
Yeah, well, on the equity side, the volatility story has been one of not really performing year to date. We've seen that things are not broken, and when things don't break in the market, then it's hard to hold on to that volatility exposure. So we are expecting for volatility to perform, to really have whether a sharp drawdown in the resilience of the labor market, or expecting inflation to pick up and the Fed reaction function to change. Otherwise, we might stay in that environment where vol doesn't really perform.
That's interesting. And thinking about volatility takes me to the China question, because I know that a lot of people who watch European markets, of course, have a lot at stake when it comes to the Chinese story. We're waiting for more detail perhaps on Saturday, so over the weekend we might get some of that. Where do you see the impact yet to play out of what China is doing?
Yeah. So we've seen a substantial change in the reaction function of the Chinese government. Over the summer, there was some disappointment for equity market, where the focus was really much more on the national security than on the consumer. We've seen that this has changed at the end of September, where the Chinese government has really emphasized that it wants to help the consumer. And that will have direct feedback into European equities, especially the China-related and the consumer-related stocks. At the moment, we haven't haven't seen really that strong outperformance of European stock on the back of that stimulus. And I think one of the reasons for that is that in the past there's been some disappointment on the back of some measure announced by China that was not thought through the whole economy. So I think the market is expecting to see what is the fiscal measure implemented. Are we going to see that boost throughout the economy on the monetary and on the fiscal side? And also around the US election, I think there's still some worries about what the result of the election would be and what that means for equity market. And then we see a path actually for equity to reach 5,300 within the European Union.
Do you have strategies for European stocks, around the US election? So obviously we know a lot about tariffs, or we've heard a bit about tariffs from former President Trump, and we know he has plans in that regard if he is elected another time. Do you have strategies that will that play around the election? Because some investors want to look through this and sort of set it to one side, and others want to be actively involved.
Yeah. So what we've noticed is that there's a typical pattern going into the US election where the months leading into the US election, you have an underperformance of the stock market and you have a vol that gets bid. So you have this seasonal pattern. Basically, some manager, they take some chip off the table, reduce their risk exposure, leading into the US election. And then once we've got the result, market can deal with that certainty. They know who's the candidate, who's the president, and then market tends to perform better. So that's kind of the roadmap that we're having going into US election. Potentially some weakness ahead with vol getting a bit more bid, and then stronger reaction after that. Now, as for the candidate between Harris and Trump, we will still have to see what the exact program that would be happening. But I think the idea around Trump would be more positive for US domestic assets, a bit less positive maybe for European assets, so maybe some cyclical underperformance in Europe. Whereas on the Harris victory, you could have outperformance of European stocks versus US stocks.
Good morning.
Morning.
Big vol spike in August. Moderate vol spike in September. Get up to around 20 on the VIX. We're kind of 20 now on the VIX. As you see how the rest of this month unfolds, does vol go up or does vol go down? Does the VIX go up? Does it go down?
So our message has been to be buying some vol on the dips. So we're saying that volatility is likely to remain flawed around current level because there's just so many catalysts ahead. Okay. We've got the US election, but we've also got the macro that is at this inflection point. We've got the earnings season that is about to start tomorrow in the US and then next in Europe. So we've got all of these catalysts. So we think that the higher vol levels are reflecting this wall of catalysts that we have, with the fact that geopolitical tensions have risen over the past few weeks. So we think this is warranted by the outlook that we're seeing for stocks.
Do you think there is still this view in the market, though, that you want to be short vol?
I think ahead of the election, that would be really tricky to have. And I think that the discussion that we're having with people around the street is that ahead of the election, you really want to keep that cautious stance, especially with geopolitical tension where there's still risk on headwinds.
What could it unfold? August, the vol spike was big, really big. Could we go back to those kinds of levels around the election?
It's not exactly the roadmap that we have in mind. This was really also a question of low liquidity that took everyone by surprise. Sure. There was like the unwind of the carry trade. There was really a lot of things happening, and that kind of led to a real spike in volatility. Also, the VIX level at 60, that was more a reflection that the bid-ask was so huge on that price. It doesn't mean really that people traded around that price. So this is not the roadmap that we have. But still, we're saying it could be really the case that this stock goes around 25, 30. Is more the level that we have in mind. Most than the spike at 60 like we saw in the August sell-off.
Okay. What's the hedge then? If you have these views on volatility, what is the hedge to navigate the next 30 days?
Yeah. So what we saw looking at previous election, the 2016 and the 2020 election, is that actually if you want to play the election, it was more interesting to play, let's say, a straddle. You don't delta hedge it, because what you tend to see is that vol gets bid ahead of the election, but it doesn't necessarily realize after the election. So you want to have that view, not so much on the delta. You don't want a delta hedge view. You don't want to hedge the vol view, but you want to have that position because stocks tend to trade in one way or the other. They have strong directionality, not so much close-to-close market volatility. So you want to have that delta, that straddle, but not delta hedge.
And how are you approaching the CPI print today? Talking about volatility, these things used to create a lot of it, but they don't create so much anymore. Labour market data seems to be the focus. Yeah. How are you approaching this CPI print?
Yeah, I think if you had asked me the question 2 weeks ago, I would have said it doesn't matter as much. The focus is now on the labour market. But since the print of last weekend, I think the focus is now also back on the CPI because we're seeing some resilience in the labour market in the US. So really the focus now is turning, are we going to get a resurgence in inflation? And that changes the whole reaction function from the Fed. And given that equities are near all-time high in the US, they are close to multi-year high in in Europe, the risks are a lot more skewed to the downside if we get a pickup in inflation from here.
If we do see a pickup in inflation, there's talk. I'm reading notes talking about kind of yields going back to 5%, 6% maybe in the United States. Yeah, exactly. Kind of how much could the market in totality change in equities change if we start to see yields actually moving back up? Now, the overall trend may be still lower, but we could get some quite big movements in the meantime as we kind of watch inflation and watch the labour market carefully in a kind of no landing, very soft landing kind of scenario. If we go back to those kinds of levels, how do I hedge that kind of risk?
Yeah, the yield going back at 6% is not what we have in mind, but if that does happen, that will for sure be a negative, be a headwind for US equity, especially now that we are coming into kind of weaker earnings, but companies are struggling on the margin side, so that will for sure have a negative impact on them. So, yeah, potentially underperformance on the back of that, but I don't think that's the playbook we have.
What's your degree of certainty at the moment? When you talk to people, how uncertain, that's the word I hear all the time at the moment. What do you think about these markets? Uncertainty. Don't know. Is that, to what extent is that reflected in what you're doing at the moment in terms of the positions that you're seeing being put on?
Very much so. I think there's a lot of uncertainty. I think people are struggling to see really what could be the catalyst to break higher on Europe, but also in the US being close to all-time high. So I think this is the perfect moment when you want to put some hedges on, when you want to look at volatility. You don't want to own only that delta position. You want to play that trade via option just to limit your risk on the downside if your view doesn't play out. So really optionality is the key in that type of market.
Benedict, nice to see you. Thank you very much indeed for stopping by to see us. Benedict Lowe, equity and derivatives strategist at BNP Paribas Markets 360, European equity derivatives strategist. Let's talk about what is happening at the Core 6 this morning. This is what the markets look like. Uncertainty again seems to be writ large across the European markets at the moment. We're struggling for a sense of direction. Single stocks giving us a little bit more this morning, but as you can see on the downside, we do have some of the car stocks. Ferrari's off the pace a little bit this morning. ASML softer as well. Schneider down. Even some of the defensive names like Nestle, the staples, are a little softer as well. Where we are seeing some upside action is in Novo Nordisk. It's interesting to see we're also seeing some movement in GSK. Let's get the single stock story. Joe is here with that.
So GSK is the best performer in Europe today, Guy. It was up around 7% at the open, now up 5.7%. Remember, settling around 70% or more of the claims on Zantac overnight. That news came around $2.2 billion they are paying to recover this issue, and that is removing a key overhang from the stock, according to analysts. That's the best gain since 2022, almost 2 years for GSK today, the best performer that we've got this morning. Going the other way was Repsol over in Spain, slipping very slightly on some weakness in both their production and their refining margins following a trading update yesterday. Then we did also have a big share buyback breaking over in Germany this morning from Deutsche Telekom, and that one was gaining as well, around 1% at the open. We'll see where it is now. There we are, up 1.4% for DT. Remember, T-Mobile in the US is their biggest business, and that is the main driver of the gains. Then a little bit of a decline over in aerospace. It's actually come back up now. That was lower when I first looked, but that is actually gaining a bit of weakness, I read, in the orders in terms of the A320s, probably more Guy's area than mine, but that one did look a little bit weak according to some analysts, but the stock coming back up today. Then we had a discounted share placing on CVC over in the Netherlands. GIC Partners offloading a few €100 million of the private equity company overnight, but that stock holding pretty steady. In terms of the analyst ratings, this one is playing into what Benedict was discussing moments ago around the US election. JP Morgan's got a really punchy note out saying that the risk around tariffs on metal is not priced into the market. They reckon that mining and metal stocks could see 10 to 20% downside if there was potentially a change in the presidency and therefore more tariffs in terms of the trade between the US and China. So that one is downgraded. We also had the downgrade of Sika. That's one stuck out. It's a $50 billion company. Only one other sell on that one, chemicals over in Switzerland. And then one of the worst performers today is Knorr-Bremse over in Germany. Boffa also doing the damage on this one, citing declines in the truck and rail market for the German brake manufacturer. And that one is falling 2.3% on the DAX index today.
All right, Joe Easton from our equities team, we thank you so much. We're going to keep an eye, of course, on those stocks and how they trade throughout the rest of the session. In the meantime, we should give a little love, I think, to the bond market as well, because you are starting to see a move higher, perhaps following what we saw in yesterday's trading session over in the States as well. Yields higher across Europe, not to the same extent as we saw in the States, but certainly taking their cue.
A move north of 4% on a US 10-year is something you really want to pay attention to.
Yeah.
How much higher could we go? Certainly the trend would point us in the direction of moving back up towards sort of 5%. You could even get as high as 6%. Depends if Trump wins the election. Obviously, the migration story is absolutely front and centre there. The expectation is he's going to spend more and also potentially impact the US labour market. That all sounds very inflationary. It is a story here in Europe as well. This migration element is something that we need to factor in as well. The migration story is something that has a direct lead through the labour market into the inflation debate. Are we living in a structurally higher inflation market environment if we are going to restrict migration?
It's been really interesting to watch it play out in Germany, and two different sides of the same conversation. So on the one hand, the politics dictating more focus on restricting migration and a focus on legal versus illegal routes of migration. Yep. But on the other side, the Chancellor going off and doing deals with specific countries to bring people in as long as there are rules for how long they can stay and the like. So really interesting to watch this play out. In terms of the bond market story, Kriti, interesting that yields, I think, on the UK, a little bit more movement there today. Really interesting story from our colleague Tom Rees talking about or quoting a Citigroup economist, a Citi economist, saying that gilts, we were referencing this earlier, gilts risk a buyer strike if borrowing surges. And this is to do with the headroom she might create for herself, Rachel Reeves, at the budget. If she creates that headroom, does she go out in the bond market and try to use it? And what appetite does the bond market have for that? At that point.
The Citi data is being used as the basis for the IFS report that we've just seen, which is suggesting that you could see that buyer strike, that concern around what demand would ultimately look like for gilts were she to decide to go out and spend even some of this headroom on infrastructure projects, which she can't give clear guarantees on the growth impacts. And that's the real challenge here. Does the market believe that if you invest for growth, if you invest for productivity, if you invest in infrastructure, it is going to lead to higher growth? And that's the challenge she faces in terms of the communication.
And you'd hope that the world has a patience to wait for growth, but some of these projects do take time, don't they?
And we're really good at delivering them on time and on budget.
Extremely good at that. Coming up on the programme, shares in GSK soar after the UK drug maker agreed to pay up to $2.2 billion to settle its Zantac liability cases. We will bring you the details. It's certainly having an impact on the shares, up by more than 6% this hour. This is Bloomberg.
Welcome back. 21 minutes into the Thursday session. This is what it looks like. Mixed, I think, at a headline level. Certainly at an index level, you're not seeing very much. Below the surface, there's a little bit of activity. There's some single stocks that really stand out. Volatility is coming down today, which is interesting as we head into the big weekend, potentially, that we're going to see out of China, plus the CPI data out of the US a little bit later on. Let's keep an eye on what is happening with Milton as well and the impact that it's going to have on Florida. But there are some really interesting single stock stories that stand out today. Yeah, absolutely. Let's go to the pharma sector. Shares in GSK soaring this morning after the UK drug maker agreed to up to $2.2 billion to resolve almost all US court cases over allegations its old Zantac medication was contaminated with a suspected carcinogen. GSK has denied liability in any of the cases, but it's agreed to this payout. Let's bring in our health reporter, Ashley Fairlong, who follows this company for us. Ashley, good morning. So, good news clearly reflected in the price this morning. What does this mean for GSK?
It's a really significant moment, and I think that shouldn't be underestimated. We've seen the stock uptick this morning, but more broadly for GSK, this really allows them to focus on their pipeline, which investors are quite optimistic about, as well as the drugs on the market at the moment, including their two vaccines, which are doing really well for RSV and for shingles.
Why are we not getting a bigger reaction in the share price? Because in some ways, this is way off what could have been the worst-case scenario for GSK.
Exactly, and this is also towards the lower end of estimates that analysts had expected. And I'm not really sure why we haven't seen that reaction just yet, but I think investors have wanted this for a long time. They've wanted GSK to settle, and this is definitely very welcomed, will be welcomed by the market.
Let's take a step back, though. What actually led to the settlement? What was the game changer here?
So this year we saw in Delaware, where was ongoing, most of the cases were happening there. We saw a judge in Delaware say that the science related to whether Zantac caused cancer could be heard in that court. And GSK appealed that decision. And then the Delaware Supreme Court decided that appeal, they would actually hear that appeal. That was quite an unusual move, and that normally doesn't happen, the Delaware Supreme Court actually saying they're going to hear an appeal. And what we understand is that then led plaintiffs to actually come to the talks about settling. And it seems like GSK was very open to that, and they seem like they've got a pretty good deal, according to the estimates that we previously had been sort of expecting, potentially much higher settlement figures.
And just to underscore, GSK is not admitting any wrongdoing here.
GSK has consistently denied that Zantac causes cancer, and they're not admitting any liability. They've always said, and Emma Wormsley has very recently, in an interview with Bloomberg, was saying that they will do what is in the shareholders' interest always. So this is clearly what they believe is in the shareholders' interest.
To pay this out. Thank you very much, Ashley, Bloomberg Health reporter Ashley Furlong, with the details there. So that's one sort of bright spot in stocks, but there aren't so many of them. I mean, the stock 600, sorry, the FTSE 100 is outperforming, and GSK is a heavyweight, so that's part of that story. But broadly, we are flat. We are really flat.
Well, we're waiting for some catalysts. What those catalysts look like remain to be seen. Is it going to be China? Is it going to be what happens with Milton? Is it going to be the CPI or the PPI print out of the United States? Is it going to be the US 10-year going further north of 4%? It's hard to really put your finger on exactly what is happening here. It's interesting that vol is rolling over a little bit in Europe this morning. We are going to talk a little bit about the car sector in just a moment. That is an area of huge interest at the moment. This Stellantis story, I think, is really interesting in terms of what it's telling us about what the European car sector needs to do next. We're starting to see rumours again of a Renault merger. There's all kinds of things going on. Plus, we've got this Tesla event a little bit later on. Is that going to transform the car sector once again?
Right. Well, yeah, Elon Musk certainly had grand ambitions on that front, doesn't he? I mean, the Stellantis story is interesting because they're talking about a shake-up of management, but we don't even know under which CEO, because we've already been reporting here at Bloomberg that they are looking at options for replacing Carlos Tavares as the CEO. He, in the meantime, is going about doing what he likes to do, which is cut costs. So we'll see whether he manages to hold on to that top job long enough to implement any strategy there.
Yeah. Stellantis shares down about 1% this morning, by the way, and which is interesting because we're talking about this China overhang. We're talking about how that hits the auto sector.
Yeah.
We also talked about how it hits the plane sector as well. Airbus, of course, was in focus, especially as a broader kind of French stock theme as well. It opened lower. It was one of your highest volume movers. Now it's one of your best performers to the upside in the French index, higher by about 0.5%. So I'm curious what the turnaround is there.
It's hard to put your finger on exactly what this is being driven by. The stock basically gapped lower first thing, bounced quite considerably, is now down. If you take a look at it on a 5-day basis, it's pretty much where it was before. I think what we got from Airbus last night was largely expected. We are looking at deliveries that are struggling to make their delivery targets. We've already known that. They've downgraded their numbers once.
Aviation in focus. Autos then still in focus. There's no respite for besieged automakers here in Europe as Stellantis eyes that management shake-up we were just discussing. Horst Schneider from Bank of America joins us. We had numbers out from BMW. Sales in China also disappointing. This is Bloomberg.
This is the opening trade. We're about 30 minutes into today's session. Seeing a little bit of mixed action, some slight underperformance on the continent. The FTSE 100 remaining fairly stable. We'll see how that shakes out, specifically as we digest what's going on in terms of the French budget, but also in terms of automakers. And this is a really interesting conversation. We're, of course, seeing it hit what's going on in Germany's bottom line. It's also hitting that of Spain, especially as just in the last 7 days or so, the EU has imposed a 45% tariff on importing Chinese EVs. I asked the Spanish economy minister about how that affects their negotiating process, their bottom line. Take a listen to what he had to say.
We're not the US, we're not China. We need our own way in this discussion. So the first element in the EU perspective, or from the EU's perspective, is that we have to bet for a multilateral rules-based order. That's what actually has worked for the EU. We are an open economy that benefits from this. But it's 2024, it's not 2004. So we need to avoid being naive in a sense, and we need to provide for our companies to compete on a level playing field with other firms that want to actually sell their products in Europe. And this is the starting point for the analysis that has been done by the Commission, where they actually put in place the tariffs that would level out these playing field with respect to the Chinese EV producers. So we thought that this is a good starting point, and therefore we were supporting the Commission in this initial endeavor, but we're not there now. We are 2 steps after this initial point, and what we're saying is that we need to keep on negotiating, we need to keep all avenues for dialogue open to find a conclusion, a negotiated conclusion, which is actually valid for both parties. It's important also for us, not only in terms of being able to protect a key strategic sector going forward, but also think in medium term to avoid an escalation of protectionist measures, which would be a lose-lose for both areas.
With all due respect, Minister, wasn't that the case 3 months ago as well? What do you feel like the dialogue has shifted in terms of between Spain and China in particular? Are you feeling pressure from Beijing? Why the sea change?
No, again, I think what has changed is that we're not at the starting point in this case. So the starting point was, listen, let's have an estimate of what would be those tariffs that could actually level out this playing field. And from then on, we need to start negotiating with Chinese producers and Chinese authorities. And that's where we're at now. So we have a good starting point, but both parties need to keep engaged in this discussion. That's what we're saying, and that's, I think, what is key going forward. The tariffs will actually get into place after the vote, but this is not the end of the road. Again, for us, it's important to remain constructive and to keep all negotiating avenues open. It's not an element of pressure. It's an element of thinking short term, but also medium and long term, and avoiding these lose-lose scenarios.
Spanish Economy Minister Carlos Cuerpo speaking exclusively to us over in Madrid there. It's a really fascinating conversation because 3 months ago, there was a real consensus in the EU around these tariffs. Germany has since split off. Spain has since split off, among others as well. And it's become a real area of fragmentation. And it really comes down to the bottom line here. What wasn't said in that interview was that Spain has joint ventures with China. Cherry, for example, has been investing quite significantly. At the same time, China's put retaliatory tariffs on pork. $1.5 billion worth of imports, Spanish imports in pork, go to China. The Spanish economy, the minister there, is facing a real threat to their bottom line.
Well, it's really interesting that this is not a story that stays in the car industry, is it? We've already seen that with French brandy, and that seemed to be an area that was in focus. And it does then threaten to escalate within the car sector, but it's not only about cars, and that's what we're seeing play out from various different European capitals.
If you're the Chinese here, what do you do? Let's look at this from the other end. You look at Europe, you see division. You presumably want to make that division even worse. You want to push countries that have taken a more benign line towards tariffs against you and make them look as if they are winning in this debate. Push the French hard. They've been they've been pushing for the tariffs. Do you want to create further splits within the European Union with the way that you respond to the tariffs that have been delivered thus far? You can only expect that will be the tactic.
If that is the strategy, it is absolutely working. And you can absolutely see that in the way that even Spain has kind of reapproached the way they're addressing tariffs. It's no longer a stick approach that if you're going to hit overcapacity, we're going to respond with a tough measure. Instead, they're saying, we're going to start here, but we're going to try to wiggle our way out. We're going to try a little bit of diplomacy, and we'll see how effective that is.
You wonder whether this is just the warm-up act, though, for dealing with the Trump administration 2.0 and how that would ultimately affect some of this negotiation. It's going to be fascinating.
It's a fascinating one as well, because we talk about in the idea of ASML. Is Europe stuck between U.S. and China? And right now they're trying to make the case that we're not always influenced by what's going on in the U.S. We're having our own negotiations.
Amazing to watch and see how this one plays out. Talking transatlantic tensions, let's talk a little bit about Stellantis and what is happening with this car company. A footprint in Europe, a footprint over in the United States. The company's CEO, Carlos Tavares, is reportedly planning a deep management reshuffle. Remember that he's trying to regain control of this business. Weeks of setbacks, the company has come out with a really damaging warning in terms of profitability going forward. There is a story that we've reported that potentially his contract will not be renewed next year. Just to give you some numbers here, 6 months. You look at the auto sector, Stellantis is the worst performing sector, stock within that sector. It is down by 52% over the last 6 months. There's only one stock in that sector that is in positive territory, and that is Ferrari. Horst Schneider, Head of European Automotive Research at Bank of America Global Research, joining us now around the table. Where did Tavares go so wrong?
Well, it needs to show if he really went wrong. Maybe he just had bad luck at the wrong point of time. We need to see. But in the end, of course, I mean, you need to consider where he's coming from. So he took over Peugeot in 2014, and he restructured the business. But then also, a key element of increasing profitability at Peugeot was increasing prices. Yep. So he invented the mantra, value over volume. And he tried to apply that as well in the US. And it worked during Corona, supply shortage. And he thought, okay, in the US it works too. Yep. And then he had to figure out it doesn't work. And he was stubborn for a long time, basically, this year, and was sticking to the approach. We do not want to take prices down because that hurts profitability the most. A price decline feeds through straight to the EBIT margin. And therefore, he tried to resolve somehow the situation. And then he had to pull the pants down, right? With a profit warning, kind of, and acknowledge, in a way, it doesn't maybe not work, right? And then he's stuck in a little bit frustrating situation, maybe, because it's not easy what to do. That they try to reduce no inventories. But then ultimately,
what does his successor need to do? Let's say somebody else comes into this business.
That's my problem. I'm not sure what the successor could be, because I still think he's the best manager for this company. I still think he's the best CEO that the auto industry had for a long time. So therefore, all the people around him, I can't see that they become really a good successor.
There's not an obvious name that sticks out here.
Exactly.
If I could just broaden things away, so Stellantis, fascinating to think about what happens with the management there. In terms of the broader story, though, for these European car makers, I mean, the slump in EV sales that we've seen seems to be, that has been the news all year, hasn't it? That expectations have not been met around EVs. Just this week, we've seen two companies bidding for lithium assets, underpinned by assumed demand within the EV sector. So what's going wrong here, Horst? Is this just, it's completely the right idea, it's the right future, but it's just not being executed well at the right price? What's happening?
Well, I'm driving a Tesla, so therefore I believe that it is the future, right? We need to reduce CO2 emissions. We have got a climate neutral target by 2050. So therefore, the politicians are in a kind of dilemma, because the consumer does not yet want the product, but they know that the last ICE car should be sold in 2035. So when you look at the year-on-year growth rates we need to achieve, you think at the moment it cannot work, it cannot happen. Ultimately, what needs to happen is that the prices come down. The prices are too expensive, and we have got here a kind of consumer electronic product. So that means the lifetime of a consumer electronic product is probably 4 years. Of an ICE car, it's usually, 10, 12 years? And that's the problem.
I drive a very old Golf. It's 9 years old.
Yeah,
it's also a good car, no doubt.
Well, that's interesting. So if it's all about the price, if the consumer has rejected it, maybe it is to do with price. China has an answer to that, don't they, with cheaper cars. I mean, BYD, we saw at the beginning of this year how seriously they are taking this export mission by actually, bringing out their own ship to carry huge numbers of cars around the world. They are not in this for the short haul. This seems like a long-term strategy. Where does this take us, Horst? Because Europe wants cheaper cars, but the European Union doesn't want them to come from China.
So have we got an hour? I could start talking. Complex question. I mean, no doubt the Chinese have got an edge on batteries. They've got kind of 15 years advantage, and 15 years. So basically, you cannot wipe that out. You cannot catch that up.
Tariffs aren't supposed to last that long, are they?
So therefore, and they are cheaper. They have got this cheap access to raw material. What you mentioned also with lithium, that now companies basically buy stakes in other lithium companies. But China is just ahead. So therefore, I'm not sure if you can catch that up. And the problems are are manifold, right? So it goes with batteries. We talk here about the car import tariffs, but in the end, it's also about batteries. I mean, look at the Green Deal, Europe. They tried to establish a battery industry in Europe with subsidies, and the import tariffs for Chinese batteries is 1%. Yeah, and basically we get dependent on Chinese batteries. They can do whatever they want in 5-10 years' time because we are dependent on Chinese batteries, and therefore I think in the long run, I think it's typical for China. 2 steps forward, 1 step back. So somehow they're going to take market share here, right?
But is there a loophole to that? If we're talking about in a bid to thaw some of these tensions, there's a move, we were just talking about in the context of Spain, a move to have Chinese infrastructure invest in Spain, in Germany, in Europe, et cetera. But then there's a question of, do you import fully assembled vehicles, or do you import the parts and then assemble them in Europe, and therefore they're a European vehicle? It's a debate that's very popular in the States in terms of what counts as an American vehicle if it's made in Mexico and assembled in the U.S. How nuanced does this debate get at the EU level?
Well, from a macro perspective, political perspective, I think what is much more important is the supply coming from China. Because on the one hand side, companies like Stellantis and also Renault, they say, oh, tariffs might be a good idea. But then at the same time, they say we need much more Chinese supply because it's so much cheaper.
Yeah.
You have got, if I just add up the job losses now in German auto industry, it mainly happens on a supplier level. I would say we are above 50,000 jobs that are being cut in the next 18 months or so.
So these are not at German car companies, these are suppliers too.
Suppliers as well. Look at ZF Friedrichshafen, Continental, Bosch, they all cut jobs. And therefore I think in the long run, that's how China gonna achieve the targets as well. It's on batteries. CATL has got much better batteries even than the Koreans. They are cheaper, and you need the batteries because we realize that the consumer does not want to pay the high price. So therefore, we need to get to lower car prices, and we only get that with Chinese batteries, and therefore we need their supply. And then they maybe automatically also can sell the cars here.
But does that loophole work to separate that from a manufacturing and assembled? It doesn't feel like that's the bit that's getting regulated in terms of kind of the made in Europe sticker. Is that loophole working in terms of getting that supply without still kind of paying for it?
I think the Chinese, they do the just pour voir to assembly here vehicles. I mean, you said it, right? They have got enough capacity in China. They could satisfy all the demand in Europe with the Chinese capacity. So they only do that here because it's required by the politicians. But in the end, we maybe just talk about the CKD production. So they still get most of the parts pre-assembled from China. So therefore, I think they don't produce in Europe because they want to, because just they have to.
Yeah.
Can I come back to your Tesla for a minute?
Mm-hmm.
Got a big event coming up tonight. Elon Musk apparently is going to announce the robo-taxi. Is that where the value is going to be? You look at Chinese car companies, it's a volume story, it's a battery story. Tesla's trying to make this a software story. Again, is this something that Europe can compete with? A, what do you expect from the event? And can we turn Volkswagen or another company like that into a software company as well? Because they're really struggling with that too.
I have another question back to you on your question. Do we have a European smartphone company?
No. We used to. Well, we used to have a phone company, but that didn't go so well.
And here history repeats. We talk about the classic innovator's dilemma, right? So Europe,
Volkswagen's Nokia here, is it?
I don't want to say that. I've got a buy on Volkswagen, so therefore I shouldn't say that. There's an element of national pride maybe also here. No, but I mean, it's extremely difficult. I think it has got to do that we don't have maybe the skill sets in Europe. We don't know how to develop a software. Yep. We start from scratch here, and again, then we have got companies in the US which doing that for years and decades, and they just have got an advantage, right? And that's also what we see tonight maybe with Tesla. I mean, Tesla de facto is doing something in its vehicles that the Europeans still aim to achieve, that any legacy OEM aims to achieve.
The Chinese are 15 years ahead in batteries. How far is Tesla ahead and other companies like it in terms of AI and software application? How big a gap is there?
Well, I think it's probably 5 to 7 years, I could imagine. 5 to 7 years.
We are really behind here in Europe.
It's not just Europe, it's every legacy OEM. I think a GM and Ford, they are not much more advanced. I think it's a legacy OEM issue. So we in Europe, the companies, they focus on buying back shares, paying dividends. Yeah, but they don't think about it, how can we compete with the Tesla and the other companies, right? I think that's the biggest mistake. And then the regulation comes in and says, okay, we should take the targets back But ultimately, the companies, they should spend more on investing into technology. And here I would give Volkswagen some credit because they invest. They are criticized for that they spend too much. Yep. Yeah. Maybe they spend at the wrong places and they are too much behind, but at least they try. It's a trial and error approach. And I hope for Volkswagen, I hope for Germany, that they fix it, that with Rivian and the JV something comes out that they can compete. But I say, I hope, I don't know.
You talked about how we will hold on to cars for a lot less time as a result of them being tech products, Horst, versus the old days when they were less tech. I mean, yeah, what do people buy cars on these days? How much of this decision is driven by the technology? Because this seems like an enormous shift.
I think in China it's much more tech-driven. There the people really buy the car because it's techy, good infotainment. In Germany, in Europe, it's still more like, okay, I need to go from A to B and I need a reliable car. It needs to look good. So that in Europe still has to change. I think when we talk about autonomous driving, the roots are basically in China and in the US. And Tesla may disrupt with NVIDIA the US auto industry, and Europe is somewhere in a sandwich position. Because ultimately, I think in Europe, the US companies, they want to take European as a market and want to make the business here.
OK, thank you very much, Horst. Thank you for joining us. Thanks for bringing us the story around the auto sector. Fascinating conversation, one that will continue. Horst Schneider, head of European automotive research at Bank of America Global Research. Coming up, Hurricane Milton makes landfall in Florida. We will bring you the latest on the storm's path of destruction. We'll continue to monitor that story, of course, very early hours still in the United States. We will leave you, though, this part of the programme with live shots of the BOJ Deputy Governor, Riozo Jimeno, who is speaking currently, delivering keynote remarks at a Bloomberg event called Navigating the New Japan. That forum is being streamed live on Bloomberg.com and on Live Go if you're on your Bloomberg terminal. This is Bloomberg.
Our 2% inflation target for 2 consecutive years assumes that the underlying inflation rate will also be around there, and that inflation expectations will be anchored at that level as well. The realization of the outlook can thus be associated with the realization of the goal mentioned in the last sentence of the statement, which is sustainable and stable achievement of the 2% inflation target. Statistics for the full fiscal year 2026 will be available.
Welcome back to the opening trade. Hurricane Milton then moving across central Florida as we speak. That's after the Category 3 storm made landfall near Tampa, just south of Tampa, in fact, leaving millions without power. Joining us now, Bloomberg weather reporter Mary Hoy, who has been tracking the path of Milton. Mary, so it made landfall at Siesta Key, just south of Sarasota. That's important in terms of insured damage, I know. What else can you tell us about the path of this hurricane?
Currently, Milton is at a Category 1. That's 2 notches down from the Category 3 that it made landfall at earlier in the evening, the previous day, local time. Even then, though, Milton continues to pack damaging winds, devastating rains, and destructive storm surges through much of the western central coast of Florida. And as Milton continues to track eastwards, now it's about 45 miles southeast of Orlando. It's about to emerge off of the east coast of Florida right around sunrise local time, but it will leave a lot of damages in its midst.
Certainly something we're going to be keeping an eye on. Bloomberg's Mary Hui giving us the latest on Hurricane Milton. We thank you so much. Now, she was saying, of course, there are going to be repercussions, not just for the damages there. We're going to see the impact in catastrophe bonds, but also in, of course, the Floridian agricultural sector as well. That could potentially feed into some of the data that we're going to get down the line when it comes to payrolls, when it comes to impact, when it even comes to food prices. You look at the fertilizer read-through. Traders, of course, watching for all of that ahead in the data points ahead. But for today, it's all about U.S. CPI, with further deceleration widely expected and markets pricing in a 25 basis point Fed rate cut in November.
Right now, we see the market, and it's repriced materially, but we're still implying 50 basis points of cuts for this year. And I think when we look at it, whether it's the strength of the underlying economy or the stickiness on the inflation front, that feels a bit too high. So I'll go out on a limb and say we only end up seeing 25 basis points of cuts again for the rest of the year.
For more on this, we're joined now by Bloomberg's Valerie Teitel. All right, Val, you are seeing a year-over-year estimate of 2.3%. What kind of impact does that have in terms of already pretty volatile bond market?
Look, I think today's number is going to confirm that inflation is still on a downward trend. We would need a really spicy CPI number for people to start raising their eyebrows about that too quickly. Year on year, yes, it is supposed to tick down from 2.5% to 2.3%. And then on the month-on-month number, supposed to get a 0.1 reading, which is going to bring us closer and closer to that Fed's 2% target.
Love an overlay charts. If you look at where we are now with inflation versus the 1970s, we'll see if we can bring this one up again. You've got a reacceleration of inflation. People are beginning to talk about this again. I've got a bond market that's got a 10-year at 4%. We're north of 4% again. I'm seeing charts that are telling me it could go as high as 5 or even 6%. How big a risk is here that the bond market has got this move lower in yields wrong and actually everybody runs to the other side of the boat?
Look, I don't think we're going to get that kind of pivot from the inflation data. I think it's first going to trickle in through perhaps another labor market print where we see a reacceleration in the labor market. You know, that is a volatile event that is going to be hard for markets to trade. But I think the real Fed pivot, let's say, to a pause, to a quarterly pace, to a skip, could perhaps be with the labor market reacceleration. So we kind of got hints of that in the last print, but we would need a bit more detail for the Fed members to start to get worried that it could then reignite inflation through wages.
The message we've been getting from the Fed of late, Valerie, has been this sort of "we're not in a hurry." Is that just because they did 50, so they felt they had to say that, or do we read something into that kind of messaging?
Well, look, in the minutes last night, it made it very clear that there were a lot of members who were against the 50 basis point cut. If you kind of read through the lines about what several and some, you know, if you add all the numbers together, it does seem like that the consensus was very much against Powell. So maybe, you know, he had to step out on a limb to get that 50 basis point jumbo cut done. So, you know, the language maybe that we've heard from the Fed members probably is just mirroring what they were saying in that meeting rather than being a change of tone.
Valerie, thank you very much indeed. Valerie Teitel on what we're looking at with the Fed. Look, there's plenty coming up. ECB accounts coming up a little bit later on. We call them minutes, but I think they're called accounts. US CPI, got the French budget coming up a little bit later on. We've got this Tesla event. There's a few events coming up that I think could provide a little bit of volatility for this market.
Yeah, the bond market very much in focus. You talked about it, whether it stays above 4% or continues to stay above 4% off the CPI report. But to me, it's all about euro dollar. Do you start to see the currency market trade off of this budget? Is that the reason?
The French budget.
The French budget.
Right, yeah, the French budget in focus. Meanwhile, we continue to watch Hurricane Milton, now only Category 1 only, as it's over landfall, apparently near the east coast of Florida. We're just seeing this National Hurricane Center alert coming through near Cape Canaveral. We have plenty to focus on as we go through the day, from the macro from the monetary policy story around CPI in the United States to some of the fiscal news here in Europe. This is Bloomberg.